Welcome to the Trending Tokens podcast with Jake Vale and Jeff Pulver. Today's episode features Dave Hendricks, founder and CEO of Vertalo, an SEC registered transfer agent, stakeholder registry, and cap table platform for analog and security token offerings. All opinions on trending tokens are the opinions of Jake, Jeff, and the guests. Nothing should be taken as legal, trading, or investment advice. The content of this podcast is for informational and educational purposes only. We hope you enjoy.
So we have Dave Hendricks with us today from Vertalo, and he has just had a press release come out last week about a deal with T0 tokenizing real estate with Advantage Blockchain. And I wanted to ask Dave for a little bit of background. How did you get into the security token space, and how did you get into securities in general?
We got into this security token space because we actually looked at doing an ICO in 2017. We created the company originally to build a product for due diligence, and we released that product to my last company in July of 2017. We were using smart contracts and blockchain for that product. It was basically a due diligence ledger technology. In September 2017, we wrote a white paper, and we said, okay, well, people are raising money. Let's write a white paper to support this fundraise. And I took this to one of my co-founders, Gautam Gujral, and I said, hey, we're thinking about raising money via an ICO. And me and our CTO, my other co-founder, William Baxter, wrote this white paper. We built this technology. Well, our general counsel, co-founder, said, we can't do an ICO, but we can do a Reg D, exempt offering, like, regular kind of VC type fundraise with a token. And we can issue that token under Reg D. So in October of 2017, while the ICO thing was in its full glory, we started issuing or working on issuing our own Reg D security token. We issued that during the Polycon conference in March 2018. I saw Jeff, he was there, and we issued that to 53 holders. The process for creating and issuing that Reg D security token was very difficult, and we couldn't find anyone to help us. We saw a lot of issuance platforms, meaning people that could build a token. They could write a smart contract and they could issue a token. We saw companies that were able to trade tokens. There's lots of them, exchanges, et cetera. And then there were some new ones like Open Finance and T0. What we didn't see, though, was this thing in the middle. We didn't see a cap table. We didn't see a way to maintain and manage the investor data, the actual holdings in the token. And if you're going to issue a security, you need to maintain a ledger of the shareholders, and you need to update it with every trade. So we had the idea, and we said, hey, look, everyone else is going to have this problem if they're going to issue securities on the blockchain ledger. And so we pivoted the company in May of 2018 to focus purely on building cap tables for digital offerings, and to go down the path of becoming an SEC registered transfer agent. And that's kind of where we got started. That was 2 years ago.
Have people confused you? Question: have people confused you with the company or companies that are just managing cap tables for companies?
We haven't been confused by them, but we do get compared to them. I mean, the big one in the space, as you know, is Carta.
I know Carta. Yeah, I mean, that was the first. Yeah. I was thinking about that, and I realized the differential. But it turns out, by the way, you could actually go into their business without issuing anything and just use blockchain as the affirmative. Presenter that yes, we have.
That's exactly what we do. That's exactly what we do. We actually just use blockchain as a database. So it's a great database, okay? And if you're not doing high frequency trading, and you don't have to worry about sub 10 millisecond transactions,
doesn't matter. It doesn't matter.
It doesn't matter.
Right.
And so we actually, in our system, Jeff, what we do is we take an existing cap table. If it's an existing company, we onboard it onto our system, and it's digitized. And then the investors can see what they own, and the issuer can see their investors. And it's on our own private chain called HawkNet.
Sure.
But it's It's not tokenized.
No.
Okay.
Yeah.
If someone wants to, and they can tokenize it in our system using literally 3 clicks. Okay. And it doesn't cost $100,000. It takes about a minute and a half. We can do it on Tezos and we can do it on Ethereum. And what that does is it creates an instrument which can then be traded on T0 or similar systems. But if they just want to use it as a cap table, we use blockchain as a database. That's what we use.
Have you reached out to, or do you have any relationships with E&Y and the other and Pricewater, like the other accounting firms who have startup divisions that worry about cap tables and just cap tables?
Yeah, so we have a relationship with Deloitte. That's our biggest one. Okay, and what we've been doing is we've been working to make sure that it meets the minimum criteria for the kind of issuer that would want to move on to us from their spreadsheet, and it does that today. Okay, what it does is it does a lot of other things, and a lot of it has to do with secondary liquidity. And so venture funded cap tables, and you know this because you're an investor and you're in these things. Venture funded cap tables.
Literally, I've done 400 deals plus. So yeah.
Right. Yeah. So you know how complicated those cap tables are, and they're all different. They've got crazy things like warrants and preferences and options and things like that, and we can manage all of those things. But you know, venture funded cap tables are not the real opportunity for what we're trying to affect. What we're trying to do is make private assets more liquid. Okay, not make them liquid, make them more liquid.
But once you do your magic, it's still up to the market to create a demand for those tokens, those instruments. That even if you make it easier for me, I mean, I've been an investor in a few startups for 16 years. Chances are they will never. My liquidation event will be a negative exit because they sold the business or they went out of business. Because if they have been acquired by now or gone public by now, they probably never will. So I have equity. But there are a lot of times
but that's not real estate though. That's not real estate, and that's why.
That's someone like I call it a startup that became a candy store because it became a great business to run, but I don't get any of the distributions. The owners run that business quite well. But if I was an investor in a fund, and I've been an LP in a bunch of funds, it would have been nice at times due to my different parts of my life. If I needed liquidity, to be able to sell my partnership interest or a fraction of my partnership interest in a fund to somebody else without having to go through this whole rigmarole and just transfer it. And I think that's
we can affect that.
And that's what you do, or at least that's what you can affect. I appreciate that magic. And for the Reg D and Reg S stuff where people are doing traditional fundraising, following the rules, and are you doing, I don't want to assume, but to me, it sounds like if I was doing a Reg D and a Reg S, I would have 2 different tokens, rather than one token that has magical properties depending upon stuff. So it's like each instrument would have its own token, right?
Yeah, and I'll tell you why you want to have 2 tokens. In the early stage, like the kind of early STOs, a lot of the issuance platforms focused on building very complex tokens. And
yes.
They tried to load up Solidity and these smart contract protocols with lots of rules that they thought would have to be affected or interpreted over exchanges. And what all that does is actually increase gas costs. It makes it hard to trade. It really junks it up. We created with Deloitte in 2018 our first simplified protocol called a V token. It's very, very simple. It's very lightweight. And we expect most companies to list their token on a single exchange or ATS, not on every one. Because if you're on multiple exchanges, buyers can't find sellers. Now, when it comes to a Reg D and a Reg S, you're probably going to be one's going to be ready to be traded sooner than the other. The S will be ready sooner to trade than a D. And the S might be bought and sold on a different ATS or an exchange in a different country. Once both of them are seasoned, and this is the securities law stuff, once the Reg D is a year old and it can then be combined with the Reg S, and the Reg S can then be traded in the United States. So creating one token that can kind of do all those things, manage seasoning and trading restrictions, and in different countries different times. It's too complicated, Jeff. So
now, do you think that competing exchanges will share listings amongst each other, so that if I'm on T0 and my friend Sammy creates the Sammy exchange, that a customer of the Sammy exchange could somehow get to my token because of inter-exchange relationship? Or how in the future, how do you think these things will trade? So will there be effectively cross listings, or does someone have to list on every exchange individually?
So there's a couple of ways of looking at that. One of the reasons why we recommend that you don't cross list is
well,
again,
not me. I'm
it's,
saying that the exchange itself, would be the cross lister, because it's their economic interest to have as much inventory as possible, so that there's opportunities to make money.
I agree, and that's going to happen at a broker dealer. Okay, so there's a couple of different factors in this. Okay, so typically the ATSs, the advanced, the alternative trading systems, are broker dealers. Okay. Depending on what country they're in or what jurisdiction, some of them can and some of them cannot settle trades. Okay, so they operate differently. My co-founder, by the way, when he was at the SEC, wrote the original white paper for ATSs as an attorney at the SEC, and so this is an issue which is of extreme interest to us. I'm not an expert in the law, but we're an expert in the application as a company. And the broker dealer is the one that's going to be marketing these offerings. If the broker dealer wants to facilitate cross linking across exchanges and then do order matching across different platforms, okay, sounds great. When those trades get settled, my system is going to record it. That's what Vertalo does. It records and updates the ownership. And so as long as we've got a connection to the broker dealer, I don't really care. I'm also not responsible for the compliance per se. That's the issuer's responsibility.
You're just keeping track of with the book. You're literally managing the cap table as it changes. And exactly. So why did the deal that you did with T0? Why them? Why now versus somebody else?
Well, so it's really funny. This whole system is really based on two kinds of relationships. Personal relationships between people and also APIs. So all the systems, in order for this ecosystem to function, people have to understand what roles they play, and no one can do the whole thing. You can't be end to end, okay? Right. And the second thing is that systems actually have to connect. And you know this, I mean, you work with Citron, you worked back in the ECN days, you know about VoIP, okay? You know about how systems have to connect.
I understand interoperability and connectivity better than many.
Yes, and so as it turns out, one of our partners, and they introduced us to T0 because they said this is an issuer who's working with us, who's creating funds. They talked to T0 and they said, T0, you should work with Vertalo and to manage this data. And so that's how we got introduced to T0. Most recently. I mean, we've been working and talking with them for a while, but that kind of spurred this. And then when we started talking to T0, I've got my co-founder who's, former SEC, and they've got their lawyers, and they agree, they got along. Okay, I can't speak any more about that sort of thing, but I can tell you that we have a philosophical, and this is on the record from T0, they say this themselves, we have a philosophical agreement on how this stuff operates. And, and so that's how we started getting to do that. They're very interested in the real estate use case. I've got a division that I haven't announced yet that is focusing on real estate. We're already doing it. I just haven't done the announcement. And so we bring demand to ATSs. Okay. That's what we do. We have clients and they want to trade. T0 is a great partner for us. And, we're working with other ATSs as well. So.
Are any of your clients on Open Finance right now?
Open Finance turned its platform off, and they're doing digital offerings. They're just not doing tokenized offerings. And we actually had a number of deals in queue to list up there. And it's a shame that OFN has decided not to support tokenized offerings. But that was a business decision, and it was a very good business decision by them, because if the issuers are not willing to pay for their service, They're not in the charity business. Why should they continue to offer a service that they can't get paid for? And Juan Hernandez and the team over there, they're fantastic. You must celebrate pioneers. You must celebrate grinders. You must celebrate those who are courageous enough to try. And that's who those guys are. So I applaud them, by the way. I think it was a really hard decision on their part.
And do you think we'll see peer-to-peer trading of security tokens from the issuers managing those transactions?
So there's a lot of issues with that. Now, so we are in conversations with some of the peer-to-peer platforms. Let me explain why that's difficult. 2 words: order matching. Okay, the reason why you pay an ATS is to perform the order matching process and to put buyers and sellers together. It's very, very hard for buyers and sellers to find each other without an order matching process. Order matching did not come out of the SEC. It was not an invention of FINRA. It came up organically because bulletin boards or, hey, do you know someone who wants to buy this, is not an efficient marketplace mechanism. It's the same reason why, we have all these things that you can buy and sell on the internet. I mean, those are all marketplaces, and people pay fees for marketplaces. So ATSs are marketplaces, and they bring buyers and sellers together.
I feel like a lot of the peer-to-peer demand, in my opinion, was coming from people who participated in offerings they shouldn't have participated in because they were not accredited. So they had an accredited friend participate. And so their desire is just to transfer a token peer-to-peer, not actually for an exchange of money, but just because they, gave their buddy some money and wanted to participate in an offering.
Yeah, I'm not sure I understand the motivation of everyone. The peer-to-peer worked very well for monopole cryptocurrencies, currencies that could pay their own commissions. Okay, if you could take a slice of the token you're trading as the peer-to-peer system, and that's your payment for facilitating that transaction, that's very effective. You can't do that with securities. The exchange cannot take the peer-to-peer market thing cannot take a slice of a security token as payment for the transaction, because then it puts them on the cap table. Okay, so that's not a thing. So you cannot pay for the commission in a security token trade as a slice of the security token. So somehow they have to get paid without the same way that you pay when you buy or sell ETH or Bitcoin. Okay, you just pay a part of the proceeds when you trade cryptocurrencies, and that's very liquid. Okay, and you don't end up on anyone's books when you do that. You don't end up on a cap table. I'm not sure that people understand it. It has a lot to do with the commission structure. The other part is that when you do peer-to-peer with these security tokens, you then push the compliance burden to the issuer, because then the issuer then has to okay the buyer. Okay, you might say
each time for compliance. You have to actually look at the rules for how they were issued, because you may find that you cannot do peer-to-peer. Specifically, right. It's actually not allowed. So when you look at how the token was issued, in order to be in compliant with the law, it's conceivable that peer-to-peer breaks that, so they will not transfer.
And it takes days, by the way, to do that. To do what you just said, okay, is not a 5-minute procedure.
No. Look, compliance is key here, right? You want to be regulatory compliant, and depending upon what regulatory environment you're in, you want to make sure that you're following the instructions as it's understood. Yes. And so peer-to-peer, my understanding is that it has its purpose and its place, but it's not the same as being on an exchange. And
there's no price discovery. There's no price.
There are no dark pools in a peer-to-peer environment. I have some background in trading systems, and I can appreciate the value of matching and discovery, because we're helping people who are fringe almost create a trade. Because frankly, if I knew to sell to you, and we were compliant, we'd figure out what to do. But most of the time, It's the odd lots. It's just, I have a position, I like to sell it. Someone's going to make me the market, and that's why they're paid a fee to do so. And you let all the regulatory stuff be proper and understood. So in the world that you're now in, that you're operating, because you have these observations and you're now actively in business, do you have any direct competitors? Is there someone in the space that you would say, okay, not that they're like you, but like, who do you, if you were, and I'm not asking you if you're better, or I'm not asking who's better, but I'm just trying to understand from a framing perspective, is there somebody that you would say that competes directly head on with what you do?
Not directly. We're a B2B SaaS data management platform.
Yes.
Okay.
So that's what I thought. But reading the background and knowing you, but not knowing what you're doing today, that was a conclusion that I had in my mind space. But but when you're talking to people that don't understand that, they probably confuse you with a lot of other people.
Yeah, I mean, they confuse us with issuance platforms.
Yes, I mean, you then say, gee, you're securitized. Oh, you're polymath. You're this, you're that, and you're not.
No. I mean, we made token issuance basically free. Okay, so we're not an issuance platform. We're not an ATS, and we're not an exchange, so we don't compete with those guys. We're not a broker dealer, so we don't compete with broker dealers. We don't do KYC and AML, so we don't compete with them. And so then it leaves you to the closest people that we compete with are probably issuance platforms because we can issue. But we did that because we saw how we want massive adoption of digital assets. And so we had to solve two problems over the last couple of years that made us different. One, we had to make it so that people didn't know how to use wallets. They just don't need to know how to use wallets.
I hope that one day somebody will come up with a term other than wallet. Because one of the challenges I think the industry still has is that some of the terminology that was cool from the days when this was kicking off 10 or 11 years ago, and run by people who are not thinking through what happens when this goes mainstream. You're still using words that were fun when this was underground. Yeah. But now that you're mainstream, people just don't associate. The Main Street consumer doesn't think about a wallet. I mean, it's one thing if I call up my broker and buy 100 shares of IBM or sell 100 shares of IBM. The broker never really thinks I'm going to download 25 of those shares to go buy something. I don't worry about who owns it, how it's sold. It's just easy. And I believe this stuff goes as mainstream when I can go to the same place I would buy stocks, and I'm able to take a position and sell it without having to worry about custody, without having to worry about any of that other stuff. That's when it's truly fluid. And until we get there, everyone's going to be challenged because it's not as easy as it sounds. And if people are further down the rabbit hole people went, the harder it is for people to see that it's not what they think it is. But the other side of the looking glass, it's a great opportunity, but I believe that we have a terminology challenge that needs to be addressed at some point. So, all right, so you're a B2B SaaS play, so that you're helping me manage my cap table. You're helping me understand who the current owners of my company are. And that, so you are, if you will, you help determine who is of record now to be owners. And I suppose some people may even confuse you with the folks that handle the actual responsibility for recording stock certificates.
Well, we do that too. I mean, we are registered.
Right. So I'm saying that if you look at the some of the old how the stock market worked and where the weak points were when people couldn't go peer to peer, and you had to have recordings of stuff. There is something to be said, but I think you said most eloquently that you're a B2B SaaS play, and you are recording ownership. I have friends of mine that did open source, an open source issuance platform, and they're in Guatemala. They did it on behalf of people who are growing coffee beans because they wanted to help finance the local crops and do microfinancing in Guatemala. So they made it simple for people to get something issued. So I'm just curious, in the market that you're seeing now, outside of the funds and outside of real estate, do you have like a 3, 4, 5 markets where digital securities will flourish? The next time forward, the next 2, 3 years, like outside of real estate and venture funds. Is there something that's coming up that you see as like the next go-to in terms of asset class that this will flourish with?
Pools of debt, which is a pretty big market.
So all right, so we'll collateralize. We'll take on Fannie Mae, Freddie Mae, Sally Mae, and Freddie Mac, and we.
Yeah.
All right. So we have the upcoming debt crisis of what happens when a government issues trillions of dollars of debt, and how to track that. Okay. So.
Yeah, and I do believe though that eventually the unicorn era is done. I've been saying that for a little while. I was a little early on that call. I think that the unicorn era has come to a close. I think there are still going to be unicorns. Don't get me wrong, but the notion that VCs are going to force feed like foie gras geese funding to get companies' valuations over $1 billion, so that then an investment bank can take them public and get them out of their position. I think that is going to be highly constrained. And so what we see is that direct listings, like what you saw with Slack and Spotify and some of these other companies, is a market which is going to democratize ownership in tech companies. I see that there are 3 markets to us. There is the fully private market, like these companies you've invested in, okay? Those companies, as soon as they're over $100 million in market cap, no one can buy them. They're too expensive to acquire, okay? If you're a $50 million company, plenty of acquirers for you. Once you get to $100 million, the number of strategic acquirers just falls off, okay? There's not that many companies that can buy you. The next exit after M&A is at $1 billion of market cap. I call this the gulch of death. This is where amazing startups go to hang around for a really long time, in between $100 million in valuation and $1 billion in valuation, because there's just not many buyers for them. I believe that this area between 100 million and $1 billion is a great place for semi-private direct listings of venture funded companies. Go out, put them out onto something like a T0, and let the employees and early investors get out and get price discovery on your shares. Have a couple of years of trading of some of the float of these private companies, and then if they continue to grow into a rational valuation, when they're big enough, go do a dilutive public financing. Okay,
but it sounds to me that what you're really describing is the market where pink sheets are. That you are the digital pink sheets. That you are the pink sheets of tomorrow today.
Yeah, I mean, you can call them pink sheets, but they'll be more documented. Okay, I mean, I'm not saying they're penny stocks, but they're not traded on NASDAQ right now. It's a secondary market, right? What you have is a liquid secondary market that's made more efficient using technology. Okay, and
that's good. That's a good thing.
Yeah, it's a good thing. There's 9. Do you know what? Right now, there are 9,000 U.S. venture funded companies that are worth between $100 million and $1 billion in valuation.
To me, it sounds to me as if people really want to get an opportunity to invest in the next big thing, they should take a look at that curve between the 100 million and $1 billion, because in today's economy, in today's market, some of those companies will pop because the industry shift and things happened. And people that are doing things because we're now living in the world of voice and video on the internet. It's happened, right? So you flick a switch and now we're in this new world, this new water, and things that were not as valuable yesterday are much more valuable today. And I'm sure that if you look at the dearth of companies in that range that you spoke about, having early access, because what you're really talking about also is the fact that unless you are an LP, a limited partner in the funds on the VCs, I don't care whether it's a tier 1, tier 2, or tier 3 VC, you have no access. And so what you're really talking about is the democratization of access to these pre-IPO companies. So as they're taking off, you as an outside investor can come in and participate in the run-up. And that's amazing. And that to me is probably a different conversation. I don't want to go too long today, but I do think that if you're helping to facilitate that, and that's part of where you come to play, that's a very important role to be in, because you are going to help others benefit from future growth and future wealth, because that's an opportunity to participate. And we couldn't do that yesterday. That we're able to now, offer access to startups, not necessarily unicorns, but offer access to startups where others couldn't get in before, and that's pretty cool.
Dave, do you have a lot of companies that have done registration crowdfund and then Reg A offerings coming to you, talking about what the next steps are for them?
Neither Reg CF nor Reg A yet. Okay, now there's a company called Core Connects. It's up in Canada. They're getting into the Reg A stuff. Reg CF has been too small to get really into using platforms like mine or thinking about listing. Right now, the limitations on Reg S are 1.06 million.
But isn't that going to 5 million? I thought there was a proposal.
Yeah, there is. It's actually in the comment period right now. I believe the comment period for that ends on May 10th, 2020. I don't know exactly when after that it's going to be in effect. I have not been made aware of anyone who's commented against that. This is a quiet thing, which you know about, okay? And most people don't. And this is a major deal, because if you can raise Reg CF to $5 million,
it's amazing.
Hello,
it's amazing. Amazing.
It's incredible. Now, once they do that, they're probably big enough to use my system. Okay, and they could end up on there. Okay, and with it's hard to do a lot if you raise 500 or 700,000 bucks. I mean, sure, you can build a product, but being able to raise 5 million by a crowdfunding,
awesome.
if you can, as long as you can keep it under the 2,000 investor limit, okay, so you don't have to file an S1 registration.
Yeah, I think Prime Trust has a product for that now, where they're keeping all of the investors in the crowdfund as a single line item on the cap table, so they can sort of avoid that pitfall.
Yeah, so you can use an SPV or some kind of custodial street name, that sort of thing, to do that. And so that will also, as an issuer, like as a guy who runs a company, I don't want to have to do investor relations for like 1,900 people. It's too expensive. It's too expensive to manage the data. But that's a great opportunity. And so, Jake, thanks for asking about that.
Yeah, I've been seeing a bunch of companies using their crowdfund money to then do a Reg A. And they all are companies that wanted to list on T0. They're not quite there yet, but they're, they have the money from the CF goes to paying, for the Reg A, and then the Reg A, if it's still successful, they're in a much better position. Yeah,
I mean, you have to redo your docs when you do this sort of thing. So if you raised a Reg D, 506B or 506C, in order to go do a Reg CF, you have to redo your docs. It costs some money. Okay, then you got to do marketing. We work with this company called DealBox that does capital formation, like advisory. They help with this kind of thing. There's some money that you have to invest to go do things like Reg CF. You can't just, put up a tile on a page.
Yeah, actually, I've done full raises of Reg CF with Facebook advertising. So I run the ads and help them out there first. Yeah, I've definitely seen the cost behind that.
Yeah. So, but Jeff is super excited about that. A lot of this stuff, unfortunately, is still only offered to accredited investors. And my understanding is that this SEC is not going to substantially change accredited investor status anytime soon. That's unfortunate. I don't know. Do you know any different?
I haven't heard anything that that they're in favor of changing it now.
I have not either.
I know that some other countries are working in some different sort of investor education stuff that can help you qualify, but I don't think that the US SEC is anywhere near that.
Yeah. So, and listing requirements on the major exchanges where the public can buy are very, very high, right?
Yes.
We've done some work in Korea, and Korea has this thing called the COSDAC or CONEX. I mean, you can list really, really small offerings on there. And it'll be interesting to see over the next couple of years if people could, start listing, smaller companies without it having to be OTC or pink sheet stuff.
Well, that's awesome, Dave. Thank you very much for your time today.
Yeah, thank you for joining us. This has been fun.
Yeah, really fun. It's really great, Jeff and Jake. It's really great. Thank you.
Cool.
Thank you.
We'll be in touch. I think I got a couple of people who are looking to tokenize real estate. And one guy's got a $20 million worth of real estate project that he wants to tokenize, and he wanted an intro to securitize, but it sounds like you guys might be interesting people to talk to also.
We've got a team. We actually, the incoming president of Vertalo Real Estate is a actual real estate fund manager who has been doing structures for 30 years.
Awesome. I'll make an intro later today. So
yeah, we have the team. It's not a bunch of technologists here, practitioners. So
that's awesome, man. Well,
thanks so much, guys.
Thank you.
Thank you,
guys.
Thank
Stay
you.
safe.
You too.
Good job.